All right, folks, here we go. Tuesday morning. It's already been a busy start to the day. Indices are in the red, so the stock market in the red, most notably the NASDAQ. That's right, the tech-heavy NASDAQ, again, getting absolutely crushed this morning, down over 1.5% as we continue to see this rapid rise in interest rates, particularly that 10-year. So the 10-year, you may recall, 10-year Treasury was trading just below 1.3% last week. We had the Fed meeting. We've seen those rates rise over the past couple days. We're now up above and have breached that 1.5% interest rate on the 10-year. So some big moves in rates. As such, we're seeing technology stocks just get absolutely crushed because those rising rates, what that means for tech stocks, technology companies need to grow. They need those future cash flows. They need to be able to borrow money to fuel that growth in the future. So as rates rise, money becomes more expensive, and you start to see those tech shares and the valuations come off as a result of that. So we're seeing that today. Look over at FX. We're seeing the dollar strength again on these rising rates, and oil, again, another big mover. We're now up above $76 a barrel in WTI, another 1% move higher. All right, folks, busy week. Volatility's back last week of the month. Let's go get some. I'll see you folks tomorrow.